everyone, ready to dive into something interesting. Today, we're going to unpack this research paper someone sent us. It's called, Do Personal Taxes Affect Investment Decisions and Stock Returns?
Oh, yeah. This was really cool. It connects the dots between, the taxes we pay and the decisions companies make. Specifically, we're talking about the alternative investment market in London, the AIM.
AIM, right, yeah. I feel like I've heard of that, but just to be sure, how is that different from, the New York Stock Exchange or something?
Yeah, so AIM, think of it as London Stock Exchange, right? But for those up-and-coming businesses, they have huge growth potential, but maybe they're not, ready for the big leagues just yet.
Oh, okay. So kind of like the rising stars of the stock market.
Yeah, that's a great way to put it. And actually, a lot of these companies, they can list on that main London Stock Exchange, but they choose AIM because it has, its perks, like lower fees, less strict reporting, that kind of thing.
Interesting. Okay, so this paper you sent, it focuses on some kind of tax change in the UK back in 2013, is that right?
Yeah, you got it. So before 2013, AIM stocks, they couldn't be held in these tax-sheltered accounts called ISAs, kind of like Roth IRAs over here in the US.
Oh, right, Roth IRAs, got it.
So imagine, right, you can't hold a potentially high-growth stock in your Roth IRA. That was the situation for UK investors back then.
Yeah, I see. So if they wanted in on those AIM gains, they were looking at a potential tax hit.
Exactly. But then 2013 rolls around. Everything changes. AM stocks, boom, they're eligible for ISs. And this is where the research gets really interesting.
Okay, I'm intrigued. Tell me more.
They saw this as a natural experiment, this change in how personal investment taxes worked, making those investments way more tax efficient. They wanted to see how that would impact the companies themselves.
Oh, wow. So it's like someone flipped a switch in the tax code and now we get this unique look at what happens. But with something like that, how do you even begin to isolate the impact? I mean, isn't there always a ton of stuff happening in the market at any given time?
Oh, for sure. Yeah, it's never just one thing, right? That's why they compared AIM companies to similar companies already on the main London Stock Exchange. The ones that were already eligible for that ISA tax advantage.
So they had a control group, like in a science experiment?
Exactly. They needed to make sure they were seeing a real effect from this change, not just, random market chaos.
Right. Makes sense. So they had the control group, they had this tax policy shift. But what kind of data did they actually look at? I mean, how do you connect the dots between those two things?
They looked at everything. Stock prices, dividends, you name it. Even how many analysts were following a company, all to see if this tax change actually led to changes in how these AIM companies were operating.
Wow, so some serious number crunching going on here. But they weren't just looking for random patterns, right? There's a theory behind all this, right? Something about how taxes get, factored into a stock's price.
You got it. Tax capitalization theory. It's a big one.
Okay, hit me with it.
Okay, imagine you're buying a house, right? And it needs a new roof, soon. Would you be willing to pay the same as you would for a house that didn't need a new roof?
Probably not. I mean, that new roof is going to factor into how much I'm willing to offer.
Right. Well, tax capitalization is similar. Investors, they think about future taxes on their investments, and those expectations, they get baked right into the stock price. If they're staring down a big tax bill down the line, they won't want to pay as much for the stock.
Makes sense. So if something becomes more tax efficient, like those AIM stocks, that should make it more attractive, right? Could even boost the price.
Exactly. Tax capitalization is the market saying, show me the money after taxes.
I like it. Okay, so that's the theory, but did it hold up in the real world? Did this tax change actually change things for these AIM companies?
That is the million-pound question, and the answer is yes. It did, and in some pretty surprising ways. In fact, the research uncovered not just one, but 4 major ripple effects from this, seemingly simple tax change.
4. Okay, now you've got my attention. What was the first domino to fall after those AIM stocks got the green light for those ISAs?
The first thing they noticed was a shift in AIM stock returns. After the change, the returns, they actually went down.
Wait, so a tax break led to lower returns? That doesn't really make sense.
It seems counterintuitive, right? But it actually lines up perfectly with what, that tax capitalization theory would predict. It wasn't just random, these lower returns. They actually went down in line with what investors would pay in taxes before the change.
Oh, interesting. So investors were basically being compensated for a tax burden that they no longer had, right?
Exactly. It's like if you found out, you've been overcome for, your bus pass for months.
Right.
The price goes down to what it should have been, but you're not actually, coming out ahead.
Right, right.
And get this, they dug even deeper. They started comparing companies within AIM, based on their tax rates before the change.
So the ones that would have been hit hardest by the old rules.
Yeah. And those were the companies that saw the biggest changes in returns after those ISAs came into play, just like the theory predicted.
Wow, that's really something. I mean, it really shows you how in tune the market is to this stuff. It's like investors already had that crystal ball out, But lower returns, that's just one side of it, right? What about this second ripple effect?
This one might make a bit more sense, intuitively.
Yeah.
They found that after the change, dividends on AIM stocks, they shot up. Companies started paying out way more to their shareholders.
Right, because before, investors were probably kind of shying away from those dividends just because of all the tax stuff, right?
Exactly. So, almost overnight, those dividends become a lot more appealing.
Yeah.
And it shows you how this one tax change didn't just, happen in a vacuum. These companies, they were changing their whole financial strategy because of it.
Wow, that's really interesting. Okay, but the story doesn't end there, right? There was a third finding.
Well, yeah. So the third one, it has to do with how companies, get creative with how they finance themselves. Specifically, how much debt they take on versus how much equity they issue, basically selling shares to raise money.
Oh, okay. So are we talking about companies going on a debt-fueled spending spree because of this tax change?
Not exactly. What they found was that, AM companies started issuing more equity and taking on more debt after they could be held in ISAs, but it wasn't reckless. See, this behavior lines up with what happens when a company's cost of capital goes down.
Cost of capital. Okay, now you're just using fancy terms. Remind me what that is again.
Oh, yeah, sorry. Basically, it's the cost a company has to pay to fund its operations either through debt, like loans, or equity, like selling those shares. When an investment seems less risky to investors, like because it's more tax efficient now, they're willing to take lower returns. And for the company, that means a lower cost of capital.
Okay, that makes sense. So because those AIM stocks were suddenly more attractive, their cost of capital went down, which meant it was cheaper for them to raise money, both with debt and equity.
You got it. And that brings us to maybe the most interesting finding of all.
Ooh, okay, lay it on me. So they had all this extra cash now. Did these companies just kind of sit on it?
They invested it.
Nice.
And we're not talking small potatoes here. They really ramped up their spending on buildings and equipment, tangible assets, higher capital expenditures. And get this, they hired more employees.
Wow. So this one tax change, it had this ripple effect throughout entire companies, right? They're growing, hiring, and it all started with this tiny little tweak in the tax code.
Yeah, it's a perfect example of how these systems are all connected,
Yeah.
Personal taxes, how investors act, decisions made by companies. It ultimately all feeds into the bigger economic picture.
Okay, this is all super interesting, but let's bring it back down to earth for a second. We've been talking about London back in 2013, but what does this all mean for, for me, for someone who's, just trying to understand the market?
That's such a good question. And it gets to the heart of why this research is so important. It reminds us that taxes, they aren't just something we pay every year and forget about TISPO. They're a powerful tool. They can literally change how people invest and what companies decide to do.
So it's not just about the money, it's what's the word?
The incentives.
Right, the incentives that those policies create, yeah. But hold on, you said 4 findings. What was that last one?
This one.
Yeah.
It's a bit of a head scratcher. So we talked about all that investment those AIM companies were doing, right?
Well.
But they also started holding a lot more cash.
Wait, really? So they were bringing in more money, investing some of it, but then just sitting on the rest. That seems, counterintuitive. Why not just invest it all if there are all these new opportunities because of this tax break?
That's the million-dollar question, isn't it? And to be honest, the study doesn't really have a clear answer, but it does offer up some interesting possibilities.
Okay, well, I'm all ears. Okay, so walk me through this. Why were these AIM companies sitting on a pile of cash after this big tax change? It seems like they'd want to strike while the iron's hot.
Yeah, it's definitely interesting, isn't it? One possibility is, strategic timing. Maybe these companies saw even bigger opportunities out there, things they maybe hadn't even thought of before.
Okay, yeah.
And by holding that extra cash, it gives them the flexibility to jump on those opportunities as soon as they pop up. It's like having that dry powder ready to go for that next big move.
Yeah, that makes sense. They're playing a long game here, thinking a few steps ahead.
Exactly. Or, and this is interesting too, this bigger cash reserve, it could be about managing risk. We have to remember, even though these end companies, they're on the rise, they're still, relatively small.
Right.
They're more vulnerable to economic downturns, unexpected competition, that kind of thing. Holding on to that extra cash, it's almost like a safety net.
So it's less about like hoarding cash and more about being strategic, right? Whether they're planning their next move or just trying to stay agile in a market that's always changing.
Exactly. And, it highlights something really important about this kind of research. There's always more to this story, right? Like this study, it gave us these 4 clear findings. How the tax change affected returns, dividends, financing, investment. But then we have this cash holdings thing. And it reminds us that financial decisions, they can be complicated.
Yeah, for sure.
It's not always about finding the one right answer. Sometimes it's more about understanding all the different factors that could be, influencing things.
It's like peeling back the layers of an onion, right? Like just when you think you've got it figured out, there's another layer underneath.
Exactly. Yeah, and that's what makes it so fascinating.
Yeah.
We challenge some assumptions, uncover these really surprising connections, and we're walking away with more questions than we started with.
And you know what? That's what I love about a good deep dive. We're not just trying to memorize facts and figures, It's about understanding the nuances, getting into that why behind it all.
Couldn't said it better myself. It's about, really looking at the financial world, thinking critically, and realizing it's rarely as simple as it seems.
Well said. This deep dive has given me a lot to think about. Next time I'm, looking at a company or trying to make sense of what the market's doing, I'll definitely be thinking about all those layers we talked about, and those unanswered questions. Thanks for taking this journey with me.
Anytime. It's always fun to explore these economic puzzles with you. And to everyone listening, maybe this deep dive will inspire you to do some exploring of your own.